Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that overall improves our financial success. Hello everyone and welcome to another episode of Money Mindset. Today I just wanted to speak about how it's crucial to sort of have a positive mindset or a positive mindset in financial gearing. And a positive mindset is crucial when dealing with financial gearing simply because it involves calculating risks, the potential of significant ups and downs in markets or in your own sort of financial wealth strategies. And I thought I'd just put it into some points so it sort of makes a lot more sense, and we break it down into manageable pieces to what I call pretty much the sort of 5 pillars that sort of make up a positive mindset to enable you with financial gearing, right? So the first one is calculating risk taking. So calculating risk taking is basically understanding and assessing the risk. So a lot of the time when we think about something to do with finance, we sort of we get paralyzed with fear. Yeah, some of us really are more than others, and it's sort of hard to overcome that hurdle of being paralyzed by the fear of not knowing what's around. And a positive mindset sort of encourages a thorough understanding of the risks involved in financial gearing. And what I mean by that, it includes analysing, certain external factors that are out of your control, like market conditions, interest rate fluctuations, or what we've been seeing. If you're operating a small business yourself or a company, it's your business or your individual ability to generate sufficient cash flow to service the next debt that you're looking at doing. So understanding and assessing risk is primarily something that each of us in our own capacity have different thresholds. So some have bigger thresholds for absorbing risk and saying, look, it'll be okay, where others sort of really shy away. So positive mindset is definitely something that encourages you with that hurdle. Embracing failure as a learning opportunity. Now, it's been sort of cliche in the last 10 years where failure has been interpreted as a learning curve, right? And it really does help when it comes to understanding what are the potential risks and everything, especially when it comes to money and financial wealth. But embracing failure as a learning opportunity also encourages a positive mindset, because basically what you're doing is you're grabbing a negative or potentially negative aspect of your financial wealth and converting it into a positive thought of trade, or however you want to interpret that. And then you say, you know what, I'm going to learn from this mistake, and I'm going to make that, recognize that not all leveraged investments will succeed. I understand this. I took a punt. It didn't work. But I'm also going to learn on why it didn't work. Why didn't that whatever I was doing, was it an investment or a business? Why didn't it work? And how can I implement things to avoid those potential mistakes or whatever it is that led to a failure? So a positive mindset will then enable you to view the setback as and see what it's all about, and see it as a setback, not a failure. That to me is a valuable lesson, seeing why it was a failure, right? We always want to understand why. Those of you who are sort of mechanically minded or financially investment minded, and you sort of had a logical brain sense to say, well, you always want to learn things why they work, as in you just don't expect them to work. And having a good understanding of why something operates or how it works is really good for having a positive mindset, simply because you're questioning why, right? So especially when it comes to failure, learn why. And having courage to act. So financial gearing often requires, making bold decisions. So when I say financial gearing, taking that next step. If you've got a business and you want to grow your business, buy equipment, whatever it might be, it could be an individual person wanting to grow your career, getting into another career or a higher position or a role, whatever that may be. You've got to have courage, yeah? You've got to it's nice to have the knowledge, but to make that initial step to move, you need that courage. And you need that courage to then be with you even after you've made that step. There's no use having courage to make a decision and then all of a sudden thinking, gee whiz, and you've lost that courage. Having courage to act is probably the sustainability of having a good money mindset type of arrangement in your own brain to convert the ideas that you are or the acts that you are trying to accomplish to be successful. So a positive mindset provides the courage to take well-researched steps rather than just being held back by anxieties. Yeah, as those of you who know me, that the anxieties are often our worst enemy. Now, pillar 2 is about optimism and vision. So believing in your optimism, especially when it comes to sort of financial gearing or having a positive mindset towards financial gearing and believing in what you're doing. So the belief of whatever you are investing in or the career that you're jumping or business that you're jumping into or you're operating currently, having a belief and a potential growth. Optimism vision is core to us being human, right? It's probably it burns the fuel that really enables us to have that energy to be able to then forefront what we are thinking of doing for a positive mindset. And belief and growth potential is number one, right? Future orientated thinking is also good because while being present is important, as in today, I always say that financial gearing inherently involves financial future planning, is in a sense to sort of say, well, yeah, we're making money today, or we want to make more money, or we need to make more money today. But then once we're at that level where we're actually on the treadmill, things are operating okay, we start to think, let's make a bit more money. What are we going to do with that bit more money? Are we going to waste it, or are we going to invest it? How much of it? So on and so forth. You micromanage it. So positive mindset fosters and focus on the desired future outcomes more so for the future. But that being said, you need a positive outlook today in order for the future to be positive, right? So you've got to start somewhere, and today is the best day to have that optimism and vision for your positive mindset. The resilience and adaptability. Now, I always think that this is also another massive pillar. I think they're all 5 pillars are massive, but this one in particular, simply because resilience and adaptability enables you to sort of, even when you're going to make mistakes, as an entrepreneur, as a business owner, investor, individual wanting to grow a portfolio of shares or Bitcoin, whatever that means, resilience and adaptability in your ethos of life or investment or entrepreneurship is massive because it enables you to sort of bounce back from setbacks. And believe you me, guys, setbacks have happened, and it's these setbacks, and going back to what I was talking about earlier, is embracing failure as a learning opportunity or a learning curve to push your positivity back into place. Bouncing back from setbacks, mistakes are going to happen depending on the degree of investment or the degree of the decision. It's going to, who knows? Mistakes happen, guys, and that's life. And it's a beautiful thing to learn off it, going back to why, right? Flexibility and openness to change is massive. Not just getting hit and going, wow, that's it, that's be all end of it. Tomorrow's another day. Reset today, going to tomorrow, and rinse and repeat and keep going, guys, because resilience and adaptability there's no use being successful in life, and as you're getting older and things are happening and you're getting wiser, but life throws these curveballs at you, and you've got to know how to move on with life, right? And problem solving focus, instead of dwelling on the problems, positive and resilient mindset focuses on finding solutions and taking constructive action, not destructive ones, right? So make sure that you're having a problem, your solving focus is always looking at, rather than dwelling on the problem, you actually have a positive and a resilient mindset that focuses on finding the solution and taking constructive action rather than just sitting there and taking defeat, right? So the 4th pillar is about financial literacy and proactiveness. Now, this is it's more of a strategic pillar simply because it enables one to sort of go, right, I want to learn how or why what I'm going to do is going to make me successful. And I sort of want to be able to converse this or have the financial literacy or understanding or have have an understanding of what I need is in the proactiveness to sort of find the knowledge or continuous learning with the investment. So if you're new to property investment or a business operation, you want to start your own business, continuous learning, yeah. Now, I'm not one for saying, well, go learn for the next 10 years about what you're going to do and then implement it. I often say that you can read as many books and do as much research as possible as in trying to ride a push bike, but it's only until you get on that push bike and fall off a couple of times and then start to learn how it works is that you're actually going to understand, and you're going to continue learning riding that push bike. And the same goes for businesses, investments, shares, this, that, and the other. You speak to a lot of people, and some people have been successful with shares. Some will turn up and say, look, I'm successful, but I'm not. It's not worth it. Property, oh, look, it's too many problems. These are the sorts of things that a positive or continuous learning or a positive mindset includes a desire to continuously improve your financial literacy. So if someone turns to you and says, oh, look, don't get into shares, I really didn't have any success with it, you tend to sort of be able to reciprocate and sort of ask why, because you're starting to understand more about how the finances work and you start to get involved. It also helps when you're going to reach out to professionals. If you're looking at buying a property and you need to speak to a broker or your share portfolio or anything like that, it enables you to have a more in-depth conversation and understand some of the terminology that some of your financial professionals like myself throw around, and it helps, right? It doesn't mean you've got to be an expert, but you definitely want to be have a continuous learning ethos in your mindset, and proactive management rather than reacting to financial issues. So, oh, you better start because you're running out of money. A proactive approach sort of involves anticipating potential challenges, could be in your career, businesses, cash flow, that sort of stuff, and knowing how to mitigate those problems, right? So just make sure you monitor regularly on your financial health and adjusting debt levels as needed. So proactiveness and financial literacy, massive. And it goes without saying, always seek expert advice to bounce ideas off and stuff. Doesn't mean you've got to engage with them 24/7 or whatever, but learning from people that are actually in the industry and they do this every day, pretty much like going to your doctor and asking about health, or your fitness instructor. Same thing when it goes to your portfolio. Even though you could be a savvy investor, pretty much like myself, or dabble in finance every day, I love talking to other financial experts. We bounce ideas off. It's not that something we want to sort of talk about all the time, but we always banter in a sense, and to keep up with markets and stuff like that, right? Now, the fifth pillar, or the last pillar, is discipline and self-control. It's no use having all the four pillars above that I've just expressed and not having the discipline and self-control, right? So the first one, that if I break this down, is budgeting and cash flow management. I am massive on cash flow management. I think a positive mindset for gearing involves disciplined budgeting, meticulous cash flow management all the time, simply because without cash flow, that's the blood flow. I did an episode not too long ago about cash flow being the blood flow. You need it. It is paramount. You could be making $1 million today, but if you don't do anything with it and invest in it, it's soon going to run out, depending on your lifestyle, etc., investment portfolio, whatever. But make sure that a good cash flow, meticulous cash flow management is in place. And it sort of just ensures debt obligations as well, right? So, it happens all the time, especially if you're investing or operating a business. And look, guys, this is another one that I just wanted to briefly harp on, which was avoiding impulsive decisions. Those of you that are really keen to get going, it's great to have a positive mindset, but always avoid making impulsive decisions going, look, this investment's kosher, it's going to go ahead, blah, blah, blah. Always make sure that you do have that due diligence. Fear and greed can lead to impulsive financial decisions. I did an episode basically for this, simply because it can be the demise of a lot of good investors out there, smart investors, thinking that there's going to be this one big fish or big fishes that are going to bring in some financial success. Really avoid making impulsive decisions and break it down. A disciplined mindset helps you maintain a rational approach, even when emotions run high, right, with investments or even businesses, right? So, getting a new portfolio or a new career change, it could be the job that you've always been looking for, or the property you've been looking for, and you just don't impulsively jump because you think it's the best thing that ever happened. Break it down. I'm not saying don't go for it, guys. I'm just saying make sure you break it down, go through all your little bits and pieces about learning and advice and speaking to people, etc. And the last thing, delayed gratification. So what I mean by that is that a positive mindset will always sort of embrace delayed gratification, which teaches us not to expect that investment to make us money instantaneously. You know, it can be a long game. So in summary, I hope this all makes sense, that a positive mindset for financial gearing is characterized by a balance of optimism, resilience, calculated risk taking, continuous learning, and disciplined financial management, right? These are just the pillars. It's about viewing challenges as opportunities, I often say, so don't see it as a problem, it's an opportunity, especially when it's a massive challenge. Higher degree of challenge, the higher returns most times, and learning from your experience and maintaining a clear vision for financial success is paramount, guys. So I really do hope that this episode does help. Hit me up if you want me to explain or get into some more detail in relation, or if it's something that you think you could learn from or take advantage of. Please hit me up, and always happy to chat, guys. All the best, and see you on the next episode.